A new all-time closing high on the S&P 500 today, up 0.27%, closing at 65,1261. We've seen the 6,500 level be a big magnet over the last couple of weeks, with price just oscillating over that level back and forth, finally breaking above it. And we're starting to see the 6,600 gamma exposure concentration take the lead. We've been pointing this out for the last couple of weeks that the 6,600 strike is seeing increased interest both in volume and overall open interest in the options chain. So in general, it does look like market participants do want further upside. We've got economic numbers coming out tomorrow and Thursday, so we'll see if that's any kind of catalyst in either direction. In general, the trend is currently up. The red line on our chart represents the 50 EMA on the 15-minute candlestick. And this is one of those very simple technical indicators that we use to identify short-term trends. And so as you can see, the short-term trend has basically been higher ever since last Tuesday. As we break above the 6,500 level, this is our upper dealer cluster zone, and that goes all the way up to the 6,600 level. So for about 100 points on the S&P, and this could be an area where we see some consolidation or potentially some resistance from option dealers who may be forced to sell futures and other hedges that they've got in place on the S&P in general. But in terms of the probability for further upside, I do think it's increasing rapidly, especially with the amount of gamma exposure that is growing at that 6,600 strike. So that's something we've got our eye on. And if we just flip over to the daily candlestick chart, we can see 6,600 obviously is the big strike. The 6515, this is mostly zero DTE gamma exposure rolling off as we close just below that level. So 6,600 is the largest GEX level after that. And then the data just continues skewing to the upside all the way to 7,000. And this is right in line with the overall trend on the S&P, leading us to higher strikes. And a lot of market participants continue positioning for a move into 7,000 by year end.
Thanks, Anthony. SPX and QQQ were definitely looking the most bullish today, which was a little bit different than what we've seen lately, with IWM having moved up over 10% since the August low. So a lot of the momentum has been with the small caps. Today was a little bit concerning because IWM lost the daily whole moving average at 238.24, but we still have positive GEX. We still have a large GEX cluster at 235 that I would look at as a possible area of support. I'm looking at the positive GEX at 240 as a possible upside target. What we need to watch is if IWM can overcome the whole moving average again, and then we might be able to open the door to 240 or even 245. Today did see option volume at lower strikes, including notable volume at 225 strike, which is negative GEX. So we do need to be aware of some of these signs. The Keltner channels are looking bullish, though. They're pointing up. If we get any liquidation break or sell off further from here, I would view that as a good buying opportunity for another push higher before the year ends.
Thanks, Sean. Next, let's take a look at XHB, the home builders ETF, down 2.94% today, closing at 116.07. Even though today was a relatively big down candle, overall, the home builders have been on fire, rallying for the last several months now, from the low 90s all the way up to 120 before rejecting over the last couple of trading sessions. The trend is still higher, as you can see by the 50-day EMA on the chart. 50-day EMA sitting at 105 and rising rapidly. We've got large gamma exposure at 115 and at 120, and those have been our targets over the last couple of weeks, and we've seen a really nice trend right into those levels. And if you've been watching our videos for any amount of time, you probably heard us reference our GLD weekly income strategy. Well, we also have a weekly income strategy on XHB that we've been running for the past couple of months. XHB has been a really great vehicle. This idea was shown to us by one of our members, which, by the way, we have a ton of great traders in our community. You can get a lot of great ideas there. I'll put a link in the description below to check out our community Discord if you guys are interested. But this idea is basically similar to our GLD strategy, whereby we're selling shorter dated puts and hedging with longer dated long puts. And on XHB, we just recently on Friday locked in $2,220 profit on our short September 5th XHB 115 puts. So collecting a really nice profit there. We left the long side of our hedge on, which was actually the September 19 XHB puts at the 112 strikes. We actually just closed those out today at $1.23. We thought there was some downside coming after the huge run up last week. We got that big move today. So basically recaptured some of the losses on our hedge and ultimately had a net profit of over $1,000 in the last couple of weeks. And really XHB has been a nice premium collection strategy over the last couple of months, generating several $1,000s for us in this strategy alone. And so after the big move today to the downside, we think this is starting to get interesting again down here below 115, especially if we get any kind of further downside into the 114 to 115 area. That's something that we're going to look to re-enter this weekly income strategy, which basically does very well in neutral to uptrending markets. And so with all the gamma exposure at 115 and 120, we're looking to reinitiate this strategy in tomorrow's trading session.
Well, we had yet another day where the VIX spent some time in positive territory, up 4% at one point earlier this morning. And of course, this is heading right into PPI tomorrow. CPI is Thursday, by the way. I've got the 4-hour chart pulled up right now. You can see we're almost right on the line, which is the whole moving average, with the VIX closing at 1503, the whole's at 1507. We may see the VIX test the weekly whole moving average at 1460, and above it we have room to go all the way up to 17.5 or higher. If we take a look at the daily chart for the VIX, and we see the importance of how I have my indicator set with the whole moving average and the 9-period SMA, the VIX went right up to that line, rejected, and closed back below it again. Now we have volume mostly at higher strikes. There's very little interest in trading options on the VIX below the 15 area. Now we had volume at 30 and volume everywhere in between the 15 and mostly 15 and 22 area. So something to keep an eye on. When the VIX is low, it might be a good time to revisit portfolio hedges and definitely be aware of the risk at this area.
Thanks, Sean. Next, let's take a look at a big mover today. United Healthcare, UNH, up 8.64%, closing at 347.92. UNH has been consolidating around the 300 level, just above the 50-day EMA, which is sitting at 301.33. Ever since the news came out that Warren Buffett took a big stake in United Healthcare, and what an entry that has been. You know, UNH has come all the way down from 600 back in April to the low 250s just last month. So a really huge drop in just a short period of time with all the problems United Healthcare has been having. However, after the news that Warren Buffett was entering a position, we did see UNH pop pretty significantly and has been consolidating, like I mentioned, right around that 50-day EMA, right around the 300 level. And we actually initiated a position right after that news back on August 18th. We initiated a position in UNH at the 330-350 call debit spread. And this was a really great setup. You can see at the time UNH was coming just above the 50-day EMA. And look at the gamma exposure picture. Price was trading at 315 at the time, but the gamma exposure data was pointing to 330, 350, and even 400 as potential near-term targets. And so because of this, we entered that position, and we did roll the position once out to the October 17th expiration, but sticking with that same 330, 350 call debit spread. Ultimately, we sold that call debit spread at $11.05, collecting $760 profit just in the past couple of weeks. So a really nice move on UNH, and I do think there's more upside coming with that potential 400 target looming large. And we are running a special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a few spots remaining, but this promotion is ending soon, so definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And as I mentioned earlier, you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade ideas and setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.